Afternoon, everybody. Welcome to the TraderMerlin show. Yes, I am glad to be back. It is the, heck, I don't even know what date it is. I think it's the 16th of October today. It was tough being away from all of you for the week, but I'll tell you what, I was absolutely gassed. For those of you who don't know, I was teaching a class in Irvine, California. The first time teaching core strategy, obviously I built a lot of the materials with Kayla and Larry and Todd, so a lot of us helping build out the materials, but first time actually delivering a full-length 5-day core strategy class in Irvine, California, and that was awesome. I'm looking forward to doing it more, actually. So for those, I think we might have some new people here. Oh, there's ads, Big Ab. No more. There's ads, I'm sure. But, we might have some new followers here, so thank you for those that suffered with me for 1 week. I know for some of the new people in the class, it was a bit overwhelming, just so much information to go back to, but hopefully you learned something along the way, and thanks for your patience with me. It was fun. I look forward to doing it, and I'm going to see about maybe doing one a month, maybe one every other month, and maybe try traveling around the country a little bit. So get me back into trading because I really enjoyed it. Part of the thing that I didn't like about teaching, what it caused me to stop, is just people who are ungrateful for the education, ungrateful for the information, and expected me to do nothing in that room but win. So, that kind of chapped my hide and made me want to not teach anymore. But once I was in there, it was actually so much fun. I really enjoyed it. We had like 35 people in there. So it was a pretty packed room, and everybody was doing pretty good. So hopefully you all enjoyed that one. And welcome to the newbies. If you are new, hit that subscribe button. All right, we have a boatload of stuff to talk about. Man, the excitement. I got a bunch of emails from you guys regarding the XLU trade. Congrats to those of you who took it. I'm still in it. I plan on my options expiring worthless this Friday, so that was a good one. Hopefully some of you guys had taken that trade as well. No, we're not using OTA trade yet. It was just, for now it's TradingView, but we might be using Tradier in the future and OTA trade, so there'll be a couple of different platforms to use, so that was good. As far as this last week that I missed with you guys, boy, a lot of my trades actually doing really well. You guys saw the price of what's going on with silver, so I've got the silver. I have my XLU. I did exit all of my IWM on Monday, the final batch on Monday of last week. So, I'm out of that one. I'm looking actually forward to going short again, these markets, as we get a rally up into some overhead supply levels. And I'll tell you why. And then I'd love it if you guys had a discussion through the chat with me. I know it's really delayed here, but I would love to see what your thoughts are on my logic as to why I plan on going short here in the next, as soon as I can. I was looking at it today, but I felt we needed more of an oomph to the upside before I start going short again. So let's talk about some of these banking blowouts. First, I'm going to do a little bit different tactic. I will go straight to the show today, straight to the charts today, and we're going to walk through some of the earnings calendars from last week. I know you guys saw the numbers that came out on Friday morning, but it was pretty interesting. When we look at the final numbers for these banks, a lot of them performing very well. I'll take a peek at the biggest earnings beat was BlackRock last week. They beat by 28% on their earnings expectations, and you notice that on Friday when they came out, big gap down there, and then recovering a little bit here today. So while it was a huge earnings beat, there was something said in the investor report or investor meeting, shareholder meeting after that kind of spooked the markets, and it did not like that. So I have not dove into the banks yet to see exactly what they're saying with regards to the 10-year and the long-term dated bonds. To me, that's really important, is what are they saying about their risk exposure to long-dated maturity bonds? Of course, we've talked about the bond market. It's been dropping, which is nice, but still much higher than it was back in March of this year when we saw all these banking and financial crisis going on. So I was actually expecting more shoes to drop with regards to the banking sector, and lo and behold, they all posted rosy numbers. Really, there wasn't one banking stock out there that reported on Friday or today that showed anything real negative. So BlackRock was your best performer, but you look at that chart, boy, it looks like a head and shoulders pattern. It looks like something is definitely going wrong with BlackRock over the past year. Moving on to our second best performer with regards to earnings, that was Citigroup. They beat by 20% on their earnings statement. They had a nice big gap up you saw on Friday morning, jumping up over $43, and all of a sudden in the last 2 days, hitting almost 40.50. Right, you have this just about face. Of course, it went into overhead supply here on our Friday session. And even though Citigroup looked great, ending the day on their earnings announcement poorly and continuing that slide today. So we'll see how this progresses over the next company. And that's Margaret says outflows were growing. That's what I want to check. I want to see the outflows, because if money's going out of these banks, where's it going to go? Right? It's going to flow from one asset class into another, or one market to another. People need a place to park their cash, unless they're just skeptics like me and want to buy Bitcoin and hold cash. So we'll see how the numbers are once I actually get some time to read through those announcements. So that was your Citigroup, which is number 2. Number 3 on the list, just barely, was JP Morgan. Of course, you guys know I will probably eternally be long-term bullish on JP Morgan. So let's go JPM. Look at the shooting star from Friday. I mean, that's Haley's comment right there. You only see that once in 100 years. Giant topping tail on Friday's earnings announcement for JP Morgan. Even though it finished the day positive, today you gapped up higher and closed lower on the session. So it's still maintaining its gap, right? It's holding that gap of gains, but right now looking weak like some of the other banking stocks as they come up into overhead supply that goes back into mid-September here. So interesting to keep eye on JP Morgan. Right on the heels of that one, you had Wells Fargo. Now, Wells Fargo has a pretty bearish candle out there today. So for those of you who are looking for something maybe for tomorrow as a potential shorting opportunity, well, yeah, hopefully, and everybody else has got sound. So thank you guys for helping out there. If you guys are looking for something to trade for tomorrow, keep your eye on Wells Fargo from a short perspective. If you look at that lower part of the shooting star that formed today, that low number there is 41.40. We're currently at 41.65. And the after hours are up a couple cents. But if we open up higher and then break below, I think that might be a shorting opportunity that could fill this gap that goes back to the Thursday to Friday night session. So Wells Fargo also reporting a beat of their earnings about 11.2%. JP Morgan was 11.3% beat. All of these companies just doing great. And then PNC Financial, which I got out of order. Here's PNC. Here's another one. I mean, how do you know? They beat earnings by 13%. 13% better than they thought it was going to be. And all of a sudden, you've got this nothing but sell-off and a big hammer formation out there today. So I've got Wells Fargo as a bearish play for tomorrow, and I got PNC as a potential long opportunity for tomorrow on a break above today's high because of that hammer formation after that 3-day slide. So those are your main ones. And then today you had Charles Schwab, which again, I have not had a chance to look into their numbers as to what was going on behind the scenes, which hopefully I will, although this week is rather crazy for me as well. Schwab beat only by 2.6%. So they barely beat earnings expectations, and they had a 4.66% move up today. Notice the jar coming right into an overhead supply zone that's going to start right around $55, and we are currently at $53.74. So all in all, these banking stocks looking really good. I called it banking blowouts for a reason, because almost all of them were having killer earnings, blowing out earnings, but I don't know if I'm that comfortable or confident that they're going to keep on rallying this market to the upside. So there's a lot of other things to pay attention to. For example, as we progress through this week, you guys know we have some fairly decent economic announcements. We have retail sales. We have ISM manufacturing numbers for Empire State and for Philly. And on that, which I didn't mention, was obviously there's the Bitcoin ETF potential approval. Now, I don't know if you guys saw it today, but Cointelegraph issued a fake news announcement saying that the SEC had approved BlackRock's Bitcoin ETF, and Bitcoin went through the roof. It went ballistic, which is great for me because I've got a bunch of Bitcoin. Well, when they figured out it was a fake announcement and Cointelegraph apologized, it came crashing back down. So let me show you what happened out there with Bitcoin on the day. 1 second as I bring that one up here. Let's see, B to the T to the C. There it is. You got a really nice long topping tail going almost up to $30,000 today. So close to $30,000, but look how short-lived it was. Here is I'll do a 1-minute chart, and we'll zoom out just so you can see the spike. There it is. So that rally, which really this article must have come out at exactly 6:23 in the morning, peaked out at 6:30. So 6 minutes it took Bitcoin to go from 28,000 up to almost 30,000. So $2,000 pop there for Bitcoin in just about 6 minutes, but gave pretty much all of it back, although it's been drifting up here a little bit since then, certainly higher than where it was before that announcement came out. So let me go to 15 here. So it looks a little bit cleaner for us. All right, so now you've got this nice little uptrend going over the past few days on Bitcoin. I think, at least for my opinion, I do believe that this is an inevitability. I think that what could happen today what happened today may slow down the approval, because what the SEC will probably look at today's announcement and think is, if it's this easy for one institution, for one media outlet to manipulate the price of a security that much, then maybe we need to step back and think about this a little bit longer. So I actually think this did a lot of damage today for the probability of Bitcoin ETF happening. However, I am still in the camp that it's going to happen by the end of the year. And as you guys probably saw on the Monday Morning Must Knows, you have, I think, 6 companies that are due to get some statement from the SEC this week, including BlackRock and Valkyrie. Some are on the 16th, some are on the 17th. Most of them are tomorrow, and then there's also one on the 19th. So this may be the week that we get that surprise announcement, but I'll be honest, I do think that because we saw this crazy spike today and the realization that this is one media outlet created this, I think the SEC may pause just a little bit. But I do think going into the end of the year, we're going to get there. So, yeah, we shall see. But that was one of your big pieces there from today's market activity. Other things, just so you know, this week, over the next 5 or 10 days, there are 20, count them, 20 different presentations from FOMC members. So expect a lot of volatility this week, folks. A lot of volatility with our markets because you never know. One of them can say something that rocks the boat, and we tend to get a really volatile move out of that. The other part that I found very interesting, I don't know if you guys, hey, Chiao, good to see you. Big Ed says December. Yep. Yeah, exactly. That's my plan. I'm going November, Big Eb. I'm going to hold till November of 2025. So I'm not really worried about it. I'd love to see a nice big surge up here in Bitcoin and crypto in general. So absolutely. Let's see, where was I going with that one? Margaret says the lawsuit against the SEC is helping. Yes. So the lawsuit that Grayscale had filed against the SEC had a certain window of time to argue that or counter that, and they declined to do so. So that is another very positive piece here. Grayscale may actually be the first one to get approved, although you got to think, if Grayscale is the one that's suing the SEC, if I'm the SEC, I'm like, oh, really? Well, I'm going to drag my feet and make sure you're the last one that gets approved just because you threatened us with a lawsuit or filed a lawsuit against us. So I don't know if you guys saw the comments from Jenny Yellen. As you guys know, the Jerome Powell, our president, Secretary of the Treasury, Jenny Yellen, have all been saying that we got to do everything we can to fight inflation. We need to curtail spending. We need to, rein back in the measures that we took to get us to this point, right, which was rampant spending. Now, obviously, the Treasury Department has a big say in that. Janet Yellen's comments today, though, make me feel like inflation may actually be getting worse in the coming months. Janet Yellen, in an interview yesterday, was saying, look, we have enough money to fight 2 wars, meaning we're going to fight the Ukraine one and help the Ukrainians out, and then we're also going to go and help Israel out. So by making that statement, it shows that the powers that be feel like we'll just keep spending more and more money, which of course would put us back into an even worse situation from an inflation perspective. So when I look at the clouds that have been looming over the markets for the past 6, 8, 9 months with regards to inflation, it's been getting better. They almost felt like they were parting a little bit. I don't know if I'm going to really celebrate yet. I have a feeling it's going to start to get worse here before it gets better, given what's going on with the Israeli conflict with Hamas and now the other pieces. So when we look at, hey, Brandon, if you look at what's going on with Israel and Hamas, obviously, I'm not going to go into who's right or who's wrong. I think we'd all agree that slaughtering innocent women and children is unacceptable in any religion, in any faith, in any circumstance. The loss of life should not be taken lightly, and I think that's a horrible situation going on over there. But now you have an event that's stirring that hornet's nest in the Middle East, which is they've been at somewhat peace for a while. Now you have the potential for Iran jumping into the conflict. The U.S. is backing Israel. China is now saying that Israel needs to back off a little bit because their actions are too heavy-handed and don't warrant self-defense. Now it's a full-on onslaught. So China now getting involved in it. So all of a sudden, this thing is starting to really escalate here. Now, I'm going to release an article tomorrow with regards to, this is the wrong wordage, but when we have periods of conflict, when you have hostility or aggressions between countries, there's typical reactions that happen. We've seen it happen many times here in the U.S., since we're the ones usually involved in some conflict around the world. When those conflicts happen, there is opportunity for us. I think that one of the things that I'm going to benefit from greatly here is my silver position, right? So I've got a very large position in silver. Typically, when you have conflict like this, there's that flight to security, safe assets, safe haven assets. So if we look at what's going on, this potential escalation, if China does get involved, if the U.S. does get involved, we may see much more pain ahead for our markets, at least much more volatility. Now, Putin got involved as well. I can guess which side he's on. I mean, no guessing there. Putin, if the United States said we're going to go after, we're supporting Hamas, then Putin would have said, I support Israel. Whatever we're going to do, Putin wants to do the opposite of that. Gotta love that guy. Are you surprised that oil has not jumped greatly? Well, maybe we can talk about that tomorrow. Brandon's going to be on the show tomorrow. He'll be the guest on the program. So if you guys like to know more about oil, want to know about natural gas, want to know about futures, Brandon will be with us so we can dive into that topic tomorrow. I am surprised a little bit, right? Remember, Iran is not the major oil producing country. It's Saudi Arabia. So let's see how Saudi Arabia and Russia align. That may cause more problems with regards to oil. And I do think that ultimately you're going to start to see this one move to the upside. So I do think you'll see more upside move for crude oil. One other piece here, which I think is interesting, when you look at, I don't like to look at the potential for war or conflict, but I brought up the point here with you guys the other day, a couple weeks back, when I talked about Taiwan Semiconductor and the fact that NVIDIA getting like 90% of their chips from Taiwan Semiconductor. Yet NVIDIA's chips are not allowed to be sold back to China. So NVIDIA gets their chips from Taiwan Semiconductor. They make a cool circuit board that powers pretty much anything to do with AI, and it is the bellwether, the best you can get. But we're not supposed to send those to China because they might steal it and reverse engineer it. And I brought up the point that very quickly, if China really has an issue with us, they could turn to Taiwan Semiconductor because Taiwan is technically part of China, even though that's the argument right now. We may get conflict there where China turns to Taiwan and says, you guys can't sell chips in America, or we'll invade you. Now, what's interesting from a military perspective, I know we have some military people in here. If the U.S. forces are sending all their boats over to Gaza, right off the coast there, just in the Middle East, we'll say, just in case there is some conflict, China apparently has been flying jets nearby, and my guess is they're scouting out saying, where are all the boats at? Okay. If they load up over there in the Middle East, then that'll kind of have them trapped for a little bit, and we can start an invasion in Taiwan because we've been hearing so much about an invasion in Taiwan. So all of a sudden, you're starting to see these chess pieces get moved around, and I hope none of them do what are anticipated, right? People are anticipating China invading Taiwan. People are anticipating retaliation from Iran into Israel because of what's been going on with Hamas. Let's hope that doesn't happen, because the bottom line is there'll be a lot more death, a lot more carnage, a lot more pain, which is, again, to me, against the human element. We shouldn't be doing that. We should come to some agreement, sit at a table and let's figure it out so we don't have to keep losing lives and watch the slaughter that goes on, which is horrible. So, Lee says, I need to set up my silver position. I like trading SFA. Thanks to you. Yeah, I'm a big fan too. We still have, I'm sure we have a presence in the sea. Defense stocks have been popping big time. You look at Northrop Grumman, you look at RTX or Raytheon, the new RTX Corporation. You look at Lockheed Martin. I mean, yeah, they've all been surging significant. Northrop Grumman really is just been rocking to the upside. So I agree. I think the Arctic talking Iran, Russia. I think so too. You've got the big bully, which is America, preoccupied. So real quickly, you could have Russia and Iran say, hey, we're going to go into Israel to kind of draw more forces there. And now you can go after your offensive into Taiwan and take over Taiwan and make sure that that's controlled. So really bad. Yeah. Is this the end as we know it? No. I feel fine. Pepe says, the Pacific Fleet is different from the European Mediterranean Fleet. We have combat commands. We are... I'm sure you are ready, Pepe. Absolutely, I'm sure you're ready. It just, maybe they're thinning a little bit to go over towards Iran. I don't know. I'm not the military guy, but let's hope none of this happens, because if it happens, we're going to see tremendous volatility out there. And again, that's part of the reason I've been loading up on silver. And as these weeks progress, let's run through our markets right now, since we talked about, no open interest on Northrop Grumman. Yeah. There might be some defense stock ETFs that might be better for that. I can't think of them off the top of my head, Lisa. I still fried and brain fog from my class I taught in Irvine this week. Let's go and look from the bottom to the top here from our markets, at least for today. Here's your crude oil, which, I do feel like it's going higher. Again, I still think we're going to hit 100 by the end of the year. I know it seems crazy now because we've had such a big drop from $94 down to $82, but I do think that the $100 by the end of the year target could very well be reached, particularly if we do have any more escalation and conflict. Now, dollar index has been a big factor in this, right? We saw the dollar index last week and the week before have a pretty nice sell-off from that shooting star, which we mapped out. That was nice. Went past the first area, but almost hit our second area of demand band right here, right around 105.40. And now we're rolled over today, which is part of the reason we saw these markets have a nice little move to the upside. So dollar index, if this continues on down, well, I'm liking that because that means that we would see this market rally back up into overhead supply where I'd like to go short, and I'll show you those levels here in just a second. Gold and silver are both down just ever so slightly. I kind of expect that after this gigantic candle we had on Friday's session. Nice big move up on gold as well as silver. So silver's chart I like a little bit better. Right? Even though it's not one big candle, it's just been a consistent daily move up. Higher, higher, higher. Today, a little bit of a pause, but I'm not too worried about it. I do think that 2150 mark is going to come into play here very soon. 10-year. Yields just hesitating. Nothing really noteworthy here with regards to yields, even though we saw a very small day today. Small update today. S&P 500. This is where the trades start to get made. Did you see Visual Capital's article about the U.S. foreign aid by? No, I didn't. I don't know if I want to, Dave. I will. I'll read it, but it's kind of discussing how much money we give out. And granted, I think that it's nice to give money out in an effort for diplomacy and try to help world peace and cohesiveness between all these countries. But I think that the reality is we give money to so many different places and it just gets squandered, utilized for bad purposes, and ultimately, it's wasted money. And I would much rather. I think there's so many things we should do in America to make better. We got a lot of veterans in the room right here, I'm sure. And I remember when my stepfather used to talk about Vietnam. So my stepfather fought in Vietnam, and he felt like he was trash. He felt like he was treated like trash by the American citizens, and it's really nothing to do with him. And I think there's a lot of soldiers out there that come back from conflict effed up, messed up. And I think we could do a lot more to take care of the people, particularly the homeless vets who have done so much for our country. Yet, we send hundreds of billions of dollars overseas to help other countries out with their issues. Like, why don't we take care of what's going on here at home first? Anyway, sorry, I went off on a tangent there. 300 billion to Israel since 1946, more than any other country. Yeah, well, strange one. The history of Palestine and Israel is a real interesting one. I won't go into it here. All right, let's go to trading. S&P 500 up 1% on the day. One thing I was looking for S&P to do last week, we came screaming up towards this little area of supply, which to me starts right around 43.58. We knifed right through that one. So now all of a sudden, my target ends up being much higher. I'm looking more towards that 4,500 if we can break through this high we achieved on last Thursday. If we get through that, I think we'll see big moves to the upside here, although I am on the bearish front right now. I'm looking to short into supply, and I think you guys can see why. I've got a downtrend on the S&P, at least for the past 3 months. Going back into mid-July, we've been making lower lows, lower highs. I think that trend will continue, so I'm looking for overhead supply as shorting opportunities on the S&P. Now, that said, out of these markets, the S&P is one I'm not focusing on. I'll explain why in just a second. So last week in my class, yes, I taught a core strategy class in Irvine, California, Chio. And it was a good one. It was a lot of fun. I really enjoyed that class. You look where we are right now with the NASDAQ, and we're actually just peaked on it this week in a supply zone that goes right around 15,400. So I like this spot as a potential supply zone at 15,400. Although we bounced today, I do think you'll start to drift lower and make new lows, ultimately testing this yellow box we have on the screen here between 14,286 and 14,511. But that's not the one I'm really focusing on. It's that Russell 2000. That Russell 2000 is strong to the short side. All right, today we bounced off those lows. I was really hoping we'd break this one, make a new low, and keep on drifting lower and lower. I do think you'll get down to my lower target based off this head and shoulders pattern, which is 1650. And I'm going to stick to that one. If we get to 1650, that might be a buy point for me, but I'm looking to short these rallies. I do think that we will start to see more weakness here. As the days unfold for October, there's a lot of uncertainty, a lot of potential conflict going forward. So it makes me a little bit nervous to be holding long positions. I'd rather be holding short. I think that the news is not going to have any quick resolution. I think most of you would probably agree that this issue with Israel and Hamas, now Iran, is not going to just stop and it's like, okay, peace, right? I mean, you come in there, you start slaughtering all the women and children and innocent people at a music festival, just enjoying life and having fun for no apparent reason. Pretty sure I'm not going to let that stand. I'm going to go crazy on you. So I don't think this is going to be a peaceful resolution. It could be prolonged, which would put some stress on our financial market. So that said, what did I have on I had my little quick list here. I want to talk about Yellen. I want to talk about the Fed meetings. I want to talk about the fake Bitcoin approval. And that was pretty much it. Okay, cool. Got my talk track pieces out of the way. Let me go back through here and see. RTX has the most open interest for November expiration. All right. October, November. Are you looking to sell options on that one, Lisa? Because if you're going out, that's only going to be like 30 days. Well, actually more. It'd be like 45 days. I would probably want, if I'm going to be buying directionally, I'm going to probably want to go out for longer term than that. Let's see, over $300 billion. Pepe, yes, Pepe, and not just Pepe. I know we've got other people here who are in the military, so thank you all who are currently doing your service. You're making me crave Little Caesars every day with these ads. I didn't realize I got Little Caesars ads popping up on there. Hey, you gotta get that paycheck, right? Let's see what else. I'm scrolling back here. Who do you think is a better Secretary of the Treasury, Yellen or Mnuchin? None of the above. I'd probably say Mnuchin. I feel like Yellen is just a puppet. And when I actually liked her as the chairman of the SEC. I did. But as the Treasury, I don't know. She seems to be very wishy-washy. Let's see what else I have here. Tom, I thought you said in a few things. What Tom said? Oh, don't underestimate Taiwan's military as well as their neighborhood friends, Japan and South Korea. Yes. Not underestimating those. But I like how you put in here, Tom says, don't underestimate the neighbors, Japan and South Korea. You know who's the military for Japan, right? That's us. We're the military for Japan. They might have some of their own, but the military since World War II has been, United States has been the military for Japan. But there is definitely some protection over there. Can't we all just get along? I feel like Rodney King right now. Of course, that's a bad analogy because Rodney King was out of his mind. But can't we all just get along? I would hope so. You like Yellen's haircut. Input on Qualcomm short. Yeah. You had to pick that bone. Yeah, 49ers lost that game for themselves. People are blaming the referee. Those were two absolutely botched calls. That was a fumble. He had it out of his hand. He was just pushing it. That's not a forward pass. That's a fumble. And number two, that hit was absolutely a legal hit. It was shoulder pad to chest pad. Crazy that we lost that game. But honestly, the guy should have made that kick. It was a bad game, but it's all right. We're still one of the better teams in football. So, and we're missing two of our players. We're missing Christian McCaffrey. We were missing Deebo Samuel and Dre Greenlaw on defense. So we're pretty handicapped, but it's okay. Fine. Way to poke that wound, Tom. Way to poke that wound. And why are you a Detroit fan anyway? All right, let's see. Eric, spelled the right way. Do you think we should look for long opportunity metal futures due to the conflict going on? Okay, here's where it gets really tricky because typically when you have the dollar in a really strong uptrend, that's actually weak for commodities. And you notice that our charts, it's kind of a conundrum, leave you scratching your head a little bit. Here's the dollar index, which has been on a really nice run up, and here's gold. So gold has been showing weakness, but in the past few weeks, I gained a lot of strength. Let me get rid of this one. That's done. This symmetrical triangle is done. So if you expect this dollar index to keep on surging, then you want to be a little skeptical on silver. I am, again, long a lot of silver right now, but I'm also selling calls against it at higher levels. So I'm really increasing my rate of return on that bad boy on a monthly basis. Sometimes weekly if I can get great premium on the week. So if there's a nice surge up. Unfortunately, I already had call options against my position for silver, but you notice we have these nice big pops here. If I didn't have call positions against my silver, I'd love to be selling some maybe weekly at the 2150s and see what kind of premium I can get there. So I think you kind of got to be a little bit careful there, Eric, if you're looking at longer term on metals. I do think you're going to see them do well. I do think the metal markets will go up to that flight to security, particularly if we start to have some conflict, but you just never know. So again, you got to do your own due diligence and figure out what your risk tolerance is. For me, it's a little bit risky to jump in at this level and load the boat with some directional options. But I enjoy any Sanders. Oh, wow. As Notre Dame lost. Well, one of my favorite things to happen over the past 2 weeks is watching the best team in baseball, which I believe, Tom, you're a fan of. Watching your Dodgers get spanked like a 2-year-old child that took all the cookies out of the cookie jar. You got a 100-game winning season. You lose to the worst team in the playoffs? Really? You got swept by them? Congratulations, Dodgers, as Master Yoda says. Choke in the playoffs, you shall. That is the story of the Los Angeles Dodgers. Detroit's looking good. Got to hand it to Detroit. All right, let's see. Yeah, Brendan, she is short. She's very... Good things coming, small packages, they say. All right, NJ, let me go into Qualcomm here real quick because we already looked at the Bitcoin price chart here. I think that you're going to get that Bitcoin spot ETF approval sometime this year. It would be very interesting. I don't think it's going to happen this week, which it could because there are so many ETF approvals that the SEC has to say something about this week, but we shall see. I know, crazy, John. You fight their whole season, right? And you're like the best teams in baseball. You're like, we're doing so good, 100-win seasons. Womp, womp, bye-bye. Yep. Well, my team was out long ago, so I can't say anything there. It's all right, Wendell. It's my Niners versus your Eagles are going to be coming up here. We should make a wager on that one. If I'm healthy, you're getting spanked. Spanked! Okay, you want to know about Qualcomm? So let's go for NJ, who I haven't seen in a while. NJ, how you been? Let's see. You wanted Qualcomm. So let's go QCOM. I'm bored to death. I mean, look at the price chart. What's going on here with Qualcomm? I mean, if I'm looking to buy something, I want something with a trend. If anything, this thing has a downtrend. Now, the good news for anybody who's holding this long is it's the first time since October of 2022 this thing hasn't made new lows. Right? We're sitting here kind of holding and basing going sideways. So I like the fact that it's going sideways if I'm long, but I don't like it. I love Qualcomm. I think they do good work. If you look at Qualcomm and their Snapdragon chip, I mean, that's a pretty powerful thing. And I know they're going to try to expand it into broader markets for AI. But this chart tells me I really don't have any interest in it. You know, for the past month, it's really been bouncing between, call it 106 and 116. So it's a $10 range, which is about 8% range in the last month. But no, I'm not. Now, I'm not seeing anything that makes me look at it and say, I got to buy this thing because it's trending up or trending down, whatever the case may be. So, yeah. Sorry, NJ. Just doesn't look that good to me. Let's see. Let's see. What else I got in here? Michael, again with your PAGs. Has the picture changed? I don't think my story's going to change on PAG. Yeah, Michael, I told you this. You said, looks like the company has good fundamentals, which down today for some reason. Remember, you've asked me about this one about 5 times, Michael. At least 5 times. And this one looks just as bad as it did before, if not worse. Why? It's making lower lows. I mean, you're right at these lows. So if you are owning PAGs and it gets below this low that we established back on December 19th of last year, that low price is $7.51. You get below $7.51, jump ship, this thing's sinking. I mean, it already sank. It's pretty much sitting on the bottom of the ocean. Now, I know you like PagSeguro. I know you like what they do. Remember, I don't care what a company does. I'm not buying something because I like the product or service. I'm buying something because I think the price is going to go up or down. Now, you may think that that's based off their product or service. But in this case, this looks like garbage, man. Look at this thing. I know you think it's got good fundamentals, and maybe they do. I just don't care. Because if I'm buying this thing, I'm buying off of hope. I'm going against the trend. I am literally trying to stop an avalanche if I'm buying PAGs. You could not pay me to buy PAGs. The only thing I will say positive about PAGs is you're in this demand zone, this base that it's been in for the better part of a year. So it's bounced off here several times. Now remember, yeah, oh man, you're trying to sell now. Yeah, don't sell now because you're right at demand. If it gets below 751, I would give it a chance to stop here because it has multiple times in the past. But they're giving you good fundamentals if you say so, but something's wrong with the company. The price chart tells you. I mean, that's a pretty clear case of bad. So yeah, it's a pretty bad chart. I do. All right, everybody. You got me now. I'm back. I have no clue. I need to get like a technician over here or something because this is the second time in as many weeks, right? I think we've had this happen 3 times in the past month where my feed dropped on you. So I'm not sure what happened. All of a sudden, I just got a red bar on my streaming software, and that was it. But my internet connection looks fine. This is really bizarre. All right. Yeah, so I'm not a fan of PAGs. If this was an uptrend, I'd tell you to hold it. But this thing's on a downtrend. Go with the trend. As we say in our industry, the trend is your friend to the bend at the end. Lulu joining the S&P index. I didn't get the date on that one, but Lulu's also. This is kind of a tricky one. They got announced. I don't know if it was added today. But check out the pop in Lulu. I mean, Lulu's been on just a tear lately. I mean, back in April, this thing was down around 230, 250. Maybe I'm being censored. I hope not. I'm not saying anything. Yeah, it's not your end. It's my end. Something happened on my end. Not sure exactly what it was. It's been happening a little bit lately, so I'm hoping I can figure out what that is and get it fixed. But anyway, Lululemon gets added. And let me look at the dates exactly when it's supposed to. Did it actually get put in today, or are they just saying it's going to get added? I'll look at that one after hours here, because typically it'll jump on the announcement. And then once it gets added, then that thing will start to sell off. Remember, if it's getting added to the S&P 500, what they're going to have to do is remove something, and any ETF or mutual fund that holds that's tracking the S&P would have to sell something and buy Lululemon. So that could be a nice catalyst for it. Okay, let's go look at your economic calendar for tomorrow. Obviously, today we had the Empire State Manufacturing Index, which was bad, but not as bad as expected. Here is the data for you guys. We had the previous number for the Empire State Manufacturing Index was an increase of 1.9. Now, the way that this works is anything above zero is positive. You want to see above zero. That means optimism and potential growth. Well, as you can see here on the Empire, we've been below zero for many months. There have been a few little pops back up, but the expectation was we're going to come out at negative 6.4. We came out at negative 4.6. So not as bad as expected. That was somewhat decent. And here's what's cooking for tomorrow. Retail sales numbers coming out. They're expecting both retail sales and core to drop. Exactly the S&P 503 index, correct. It's because some of these companies split into two. So you have like GOOG and GOOGL, and there's a couple others like that, which makes it 503. Kind of silly, but it is what it is. So at 5:30 in the Pacific time tomorrow, you have these coming out with earnings. You have retail sales numbers. Not these with earnings, these retail sales numbers coming out, which will be interesting. You also have industrial production, capacity utilization rate. You've got an FOMC member speaking, business inventories, and then the NAHB housing market index. So quite a lot of stuff coming out for the U.S. And then one that I may actually do more of a show on Wednesday is this TIC long-term purchases number, which is expected to surge from $8 billion to $76 billion. That's the amount of inflows coming into America or going out with regards to stocks and bonds. On your earnings calendar, well, we do have more and more earnings. So, of course, we kick things off on Friday with JP Morgan, Citigroup, Wells Fargo, BlackRock, which was fine. Today we had Charles Schwab and a couple other smaller banks. Here's your calendar for Tuesday. Bank of America, Johnson & Johnson, Lockheed Martin, Goldman Sachs, Ericsson, United Airlines, Bank of New York Mellon, JB Hunt Transportation. I mean, you have some big Interactive Brokers. Big names coming out with earnings tomorrow. All eyes are going to be on those top four, which is Goldman Sachs, Lockheed Martin, Johnson & Johnson, and then ultimately Bank of America. All right. Let me see. I think I had a couple questions here I'll get to before I wrap up. I was going to try to wrap it up early, but we'll keep on going. Why not? I've been gone for a while. Let's keep going. Michael says, I'm ready to sell everything, and I guess I can't pick good companies. Well, you may be picking good companies just before they turn. Michael, it really is clear to me that you love fundamentals, which I don't have a problem with. But if you combine good fundamentals with a bad-looking price chart, be skeptical of the fundamentals. If you find something that's been moving up and it's got good fundamentals and it's got a nice uptrend to it, then I believe I would have more belief in the fundamentals. For a stock like that, PAGS, you know the fundamental analysis of it. I don't. Something's wrong there, right? I think you'd agree that if something has good fundamental numbers, they should be trending up, at least not cratering and falling like PAGS is. All right, so here's the question. This is from Landis. He says, any trading strategy for war? Example, buy at the money puts for 120 days, close it when it hit with a strong demand zone, and then switch to sell cash secured puts. So if you're buying puts, here's how I would play it, because we don't know if things are going to go south. And, you don't want to take too much of a chance here. On a day like today where you have the markets rallying up nice, these are the types of days where it may benefit you to buy some out of the... So you said at the money. I'll go deep out of the money. I don't want at the money. Those are too expensive. I would rather go deep out of the money, way out, because I can get a ton of them for cheap. Now, the risk is the markets don't fall at all, and I all of a sudden am stuck with a position that is going to expire worthless because it never got close to it. On the best case scenario is exactly what happened to me back in 2020 when COVID hit. I had a gentleman on my show on Power Trading Radio, and we did a show called How to Protect Yourself from a Black Swan Event. And we went through the whole process of buying really deep out of the money options, which are cheap. No one thinks it's going to get there. And then all of a sudden, all hell breaks loose. Let's knock on wood. Let's hope it doesn't happen. But if it does, then there's going to be significant percentage rate of return increases for those deep out of the money options. So that's how I would do it. 120 days, sure. If you go from today, you're looking at November, December, January. All right, maybe even go out to the February, buy some February deep out of the money puts on the S&P or NASDAQ or some of the broader indexes. Sure. That's how I would do it. Now, to that end, there will come a point, and if it does start to sell off, which we don't know whether it will yet, okay? We don't know that it's going to sell off. But if it does start to crash, and I see these markets drop 10, 15, 20, 30%, then yeah, I think I would look to switch to selling cash secured puts. And if I do get levels where I'm fine owning something long term, whether it's individual security or something like an index like the S&P, then yeah, I think that would be the prudent action to take. But I think you all need to be very careful right now, and I say that to me too, because I think that the uncertainty of the geopolitical events, not just with Israel, with Taiwan, and all that is going to be, I think, a bit of an issue going forward. So I'd be a little more skeptical. Obviously, my bias is to the bearish side here, even though I know we go into the end of the year. You typically get a Santa Claus rally and things look great. Yeah, got to be careful. I'm actually going to release an article tomorrow at Bar Chart. That should be out, I think, tomorrow morning at 8 p.m. or 8 a.m. Central Time. I'll release that article on Bar Chart, which is dealing with conflict and what to buy. All right, let's see. Fed will skip rate raise, but will raise in December. I think you're right. I think you're right. Michael says, I've never shorted a company in my life, but the ones I buy would be better shorting them. Yeah, and I guess what I need help with. Michael, I'll give you the simplest, easiest lesson. And I don't know if Brandon is still here. Brandon's an instructor as well. But there's a phrase that I want you to write down. Like, take your pen out right now and write this one down. The trend is your friend until the bend at the end. I don't care what the CEO says, what your friends say, what the media says, what the news says, what the fundamentals say. If you look at a price chart and something is trending straight down, don't buy it. Short it. Right? Now, some of the stuff that you've brought up to me is actually really cheap. So I don't short stocks under $15 personally. It's just something I don't do. So I would, I'd say whatever that trend is, that's what your bias should be. So if you see something that's got a nice trend to it to the downside, I want to think about shorting it. And I know you love fundamentals because that's what we're taught to look at. We're taught to buy good companies, invest in good leaders. You can lie on fundamentals. Price charts don't lie. Price charts tell you all that is known or knowable. So yeah, keep your eye on that one. The trend is your friend until the bend at the end. That is a mantra that has been the backbone of my trading investing career for over 25 years. 27 now at this point. When am I teaching core again? I'm not sure. I'm actually going to reach out and find out. I think I may actually be teaching at some point in November, but I don't know where exactly, but we'll see. It's a lot of work. For those of you who have taken OTA classes, I hope that you have a respect for the instructors or just classes, period. Online classes are one thing. I think online classes are much easier to teach. There's less emotion, there's less energy. And you teach in a live online physical or a live physical class, right, where I'm walking around that room and I'm keeping everybody engaged, and man, it was good. It was a great time in there. So hopefully I get some new followers because of that. But hopefully I changed their perspective of financial markets and got them on their journey going forward. Tom says, we have really dealt with the problem of trillions of printed dollars. We are paying interest on it. The market got propped up. Still need to come down. Right, but Tom, if you listen to Jenny Yellen's comments and said we have enough money to fight multiple wars, it's telling you that they're going to print more money. All right, we'll start sending more money. We'll buy more weapons or whatever it needs to be to help out the cause over there. So now all of a sudden, my thoughts that inflation might actually be getting under control might not be getting under control here. I agree with you. We made this problem. When I say we, it's not Biden, it's not Trump. It's a combination of both of those characters plus. The real issue would be the Federal Reserve. The Federal Reserve is the backbone of the inflationary problem today. Jen is printing more. Well, she'll be issuing more bonds to raise more money. Remember, when you start selling more bonds, that means the yields are going to rise. So by the Treasury Department selling more bonds and selling more bonds to get money so we can now give to other people, well, that's going to cause interest rates to rise. And remember, my target on the interest rates, let's bring that one up here. Let's go to the 10-year. All right, here's your 10-year. I've got two lines drawn on this one. and I forgot why we had this number drawn, but I think it was saying, I think I made the point of 9% would be kind of the 30-year fixed rate mortgage by the end of the year. And right here where the first dot is, which is when we were right around 4.8% on the 10-year, our mortgages were at 8%. So I think I moved this up and said, well, 1 more percent logically would give us another percent. So if we got to 5.76 roughly, we'd have 9% mortgages by the end of the year. So let me put a vertical line right there. And again, the reason for it is they're going to have to sell more and more bonds to raise money to give to other countries, which should really be going to our country and staying here. But that's, got to help out, I guess. Bonds, dangerous things. Yep, exactly. Is it futures or options session? What are you talking about, Rob? I mean, what am I teaching? I'm teaching core strategy, which is that foundational course for OTA. I'm not smart enough to teach the options class. I saved that one for people like Larry Jacobson and others. You know me, I'm a simpleton when it comes to options. I try to keep it very simple for myself. All right, guys, that's going to do it for today. We did your earnings calendar. We did your economic calendar. So you got a bunch of stuff happening up tomorrow. Still bullish up, Rob? All right, cool. Oh, you want Corey on? I'll bring Corey on. If I can. Corey's got his own gig going on, but we'll see if we can bring him on. So, Landis, you had that one question around the money. Glenn, I got your question, but I'll get to that one on tomorrow's show. As you guys, as I mentioned earlier, I'm going to have Brandon Wendell in the program for tomorrow. So if you have questions for Brandon, let me know. Send them in at TraderMerlin@gmail.com or put them down below any of the YouTube videos. And I will comment on those ones on tomorrow's show. So thank you guys so much. Sorry to be gone for a week, but it was a lot of fun teaching a physical class, and I will see you guys on tomorrow's show. Wait, what's today? Today's I'm good every day this week. Obviously, next week, I will not be doing a show on the 26th, as I tend to not do anything on the 26th because that's my day. Anyway, I'm going to cut this off before the ads hit you. They say they're going to hit in 57 seconds, so hope you guys will have a fantastic remainder of your day. I will see you tomorrow with Brandon Wendell talking futures, talking markets, whatever you guys want to discuss. I'll see you tomorrow. Take care.